Okay, so I have my directions open for work together 2-2. Let's listen to the directions before you start filling things in, because you can very easily get something wrong on here because you don't know how Applia is going to grade it. And that's one of the things I need to talk to you about on assignments is Applia will go through and there's only one correct answer. Okay. So for our directions for 2-2, it says T-accounts are given below. Your instructor will guide you through the following examples. Kathy Burgum owns Burgum Services. Burgum Services uses the following accounts. Some of the accounts will be explained in 2-3. Okay. So we have cash, accounts receivable, Sam Erickson, supplies, prepaid insurance, accounts payable, bail supply, Kathy Burgum Capital, Kathy Burgum Drawing, sales, advertising expense, and rent expense. So drawing to rent expense we're going to worry about in the next section, so you can just ignore that for now. We have transactions April 1st to the 9th. Please notice, those are not, the transactions are not numbered, they're actually by date, which is going to be how we do most things for accounting, is going to be by the date that it happened. Now, our directions here. Prepare 2 accounts for each transaction. On each T account, write the account title of one of the accounts affected by the transactions. For each transaction, the first T account should be the account debited, and the second account should be the account credited. So if you have the right accounts, but you list the credit one first, it will be marked wrong. Please don't work ahead. Okay? Please let me teach you, give some information, and then you will have plenty of work time. Okay, and then number 2, we need to write the debit and credit amount in each T account to show the transaction affected. So one of the things that when I look up and I see a lot of you have split your screen where one side you have your Applia and the other side is directions. That is a great way of using your screen space. These directions are also going to be in your book, but what you'll find won't be in the book is about that says note the computer will grade, because obviously the book is not going to have that direction. It's going to be something that's only going to appear on Applia. Okay, so I'm going to go through and we'll do these together. I get that many of you will be able to race through them, but I want you to, again, hear the questions that I ask you, because you are going to coming up soon, you're going to have a quiz on whether or not you can answer debits and credits and normal balances. And we will take this quiz until everyone gets 100%. It's that important. Okay? So, April 1st, you will notice that April 1st transactions are going to be filled out on these 2 T accounts. Receive cash from owner as an investment. This should look familiar because I think I just did it on the board. Dylan, can you give me to the 2 accounts that are affected? Cash and capital. What is the actual name of our capital? Kathy Burgum Capital. Okay, because that's the name of the owner for Burgum Supply. Okay, so we have cash and we have Kathy Burgum Capital. Now, what is important in Applia, we have to put the account that's being debited first on top, and the account that's being credited needs to go on bottom. So we need to ask a couple questions first. So the first account that you said was cash because it says receive cash. What type of an account is cash, Dylan? Asset, liability, owner's equity. It is an asset. What side of the accounting equation is it on? Left. So therefore, the debit is going to be the increase side. Okay? I'm asking all these questions before I type in a single word. Now, debit is the increase side for cash. Is cash being increased or decreased because of this transaction, Dylan? Increase. So we know cash has to go first. Now, if you were writing this as a piece of paper and you put the credit one first and the debit one second, I wouldn't care. I would mark it as correct. Applia will not. It will mark it wrong because it says the only correct answer for this part right here is cash, which is a good practice to get into because in happy accounting land, debits always come before credits, which is why I always say debit then credit. Debit on the left, credit on the right, because I want you to realize debits come before credits. So we know that one account that's going to be affected is going to be cash, and it's going to be increased as a debit for $5,000. Now, one thing that is true is if we know that this one's being debited, the other account has to be credited. You can't have 2 debits. So also in happy accounting land, if you figure out one, you know the other one has to be the opposite. So that does make our life simpler. So the other one we're going to put down here is going to be Kathy with a K, capital, and she is going to be credited for $5,000. You will notice on here there is not room to write the word debit or write the word credit or normal balance and plus and minus. They're expecting that you remember that already. So April 2nd, again, we need to go down here for April 2nd. Transaction reads paid cash for supplies. Chris, what are the two accounts that are being affected by paid cash for supplies? Cash and supplies, okay? Now, let's do the first account that we hear on there. And the first account that we hear in there is cash. Would you agree? Okay, cash is what type of an account, Chris? Asset, liability, or owner's equity? I'm sorry. Asset. What side of the accounting equation is it on? Left. So its normal balance is going to be debit. Okay, so now the next question that we have to ask ourselves, Chris, is do we have more cash or less cash because of this transaction? Less. So what is the decrease side of cash? Debit or credit? Credit. So cash has to be credited, so it can't go first. It's got to go second. Would you agree? See how I just asked that question? And what's the other account that you said that was being affected, Chris? Supplies. So cash we determine is going to be credited for $50. So if cash is being credited, what has to happen to supplies? Has to be debited. Supplies is also an asset. We have more supplies, so therefore it's going to be debited. April 5th. Bought supplies, paid cash for insurance. Jared, what are my two accounts? Cash and what? And what? Thank you, prepaid insurance. We don't have an account called insurance, but we do have an account called prepaid insurance. So the first account that we hear within this transaction is going to be cash. Would you agree, Jared? Okay, cash is on what type of an account? It is an asset. What side of the accounting equation? Left, and so therefore its normal balance is debit. Normal balance is always the side that makes it go up. So, Jared, is cash going up or down because of this transaction? Down. So therefore, does cash come first or second? Second. Cash is being credited for $75. And insurance is being debited for $75. Okay. April 6th. My transaction reads, bought supplies on account from Bale Supply, $100. Cody, what are my two accounts being affected? Supplies and accounts payable, Bale Supply. Okay, so let's start with the first account that we hear in there, and that is going to be supplies. Cody, what type of an account is supplies? Asset, liability, or owner's equity? It is an asset. What side of the accounting equation? Left, so its normal balance is debit. You were one question ahead of me, everyone. So your mind is racing ahead, and I'm slowing it down. Okay, so we said that supplies is an asset that has a debit normal balance. Do we have more supplies or less supplies because of this transaction? More. So supplies is going to be increased. The increased side of supplies is debit side, so that one will go first. The other account that we're affecting is accounts payable, Bale Supply. What type of account is accounts payable, Bale Supply, Cody? What type of an account is accounts payable, Bale Supply? It is a liability. What side of the accounting equation is it on? On the right. So it has a credit normal balance. You're just one step ahead. You're doing great. Awesome. The 9th. Okay. For the 9th, paid cash on account to Bale Supply. Scott. What two accounts are being affected? Okay, so which one do we hear first in the transaction? Cash. Okay, so give me information on cash. What classification? What side of the equation? Normal balance. Excellent. So my question now, Scott, is cash. Do we have more cash or less cash? So therefore, what is happening to cash? Debit or credit? Credit. So cash has to come second. And therefore, accounts payable, bail supply would be debit. What is happening is we are basically paying on the account and we owe less money to accounts payable, bail supply. Accounts payable, bail supply, just like what Cody told us, is a liability, and it has a credit normal balance. So if we pay accounts payable, bail supply, we need it to go down how much we owe that company. So therefore, we will debit accounts payable, bail supply. And then we're going to do our check our answer for our work together. And I got all green check smiley faces. How'd you guys do? All X's. Try again. Go ahead and do on your own. I know you can click on to show the answer right away, but that's not going to help you to see if you can do it without knowing what the answers are. So try the on your own, please.